Okay, so we're back with part 2 of this video from E-mini Profile Day Trading, and we're picking up on the 25th of January from where we left off. We've been looking at this series of trades in which we are trading the euro, combining all the tools that we have been exploring for the past couple of years on this blog. And now, start of the new year, our emphasis on the euro futures, and we're seeing if this can be something transferable over to the spot forex. So I basically, for the first time, put some money on the line with a spot forex account with GFT. I think they're pretty as good as you can get with all of the drawbacks of forex in general, paying the spread, and the fact the money's not as safe, but you know it's getting better. I've been very happy with the software, the deal book software. And meanwhile, on my computer at the same time, I'm using all my NinjaTrader tools and studies because of the tick for tick parity, you know, with just a little bit of a spread of about 7 cents, but tick for tick they move right in step. So we've been looking at the trades, and they give you all the accounting. And what we've been looking at is what I'm doing, combining all the confluence of variables as we've been seeing, and simply looking for directionality, combining the direction and looking for entries, 38 or 50% retracement, and you know, combining our technical reading of the chart with the eyeballing where the rotations would be to indicate support. So here we broke under this support here. It was immediately retraced with a 1, 2, 3 bottom and a strong up move back in the range. The rotation here with still enough energy to penetrate. Moving averages sloping and lining up, and you know the momentum and stochastic supporting this easily. So combining all these tools is what we're doing, and the opportunity to split the contract in half is fantastic, because with the scale, whether you look at it as a safety net or just extremely great enhancement of the probabilities in your favor to profit on a pullback on a strong direction like this, if it were to go down to 78% retracement or all the way back. You know, if we're entering down here, there's so much technical support in that rotation, and we're always looking to get in around handles or half area, confluent with Fibonacci, confluent with some volume that is observable from the price structure and earlier patterns, so that these trades are very, very safe. Doesn't take much time to do this. I can just put it on around the close or right after the evening Merc session opens, walk away, eat dinner, do whatever I want in the evening, or even go to bed if the trade looks good. And you know, or if you're a little concerned that it's taking too long, like I was here, just settle for 20 or 30 ticks. And as we look at the farther along trades here, the confluence that I'm getting as the trend is extending. So that, this trade I was a little conservative because I saw the rotation there, and it just looked like it was taking too long here. And it did fall back, but I wasn't trading. This is 1:30 in the morning my time by that time, so I just basically called it a night with my $113 again, because I'm just using a $500 per 100 tick valuation. So I'm margining, however they call it. It's $50,000 basically when you put on a half of a contract size, or you could use the full size, which would be $1,000, which is still less than the $1,250 of 100 ticks on the Merc. So using the half gives you this opportunity for scaling. Let's say, for example, over here where we're at, I'll put in an order here at working, let's say, around the 52, let's see, 3520 area, and then down at the 3405 area, so that I'm giving it a huge range if it's gonna go a little bit against me. But down here, I'd be averaging with all of this support here that I would just consider, maybe a 95% probability. Otherwise, you can take your hit under that, and occasionally 5% of the time you might take a little bigger hit. But as you're going to see, we can be getting 30 ticks consistently, 20, 30 ticks, and sometimes 100 or 200 ticks. So the risk reward is definitely there with this conservative contract size valuation. Even if you put on a scale that's 80 ticks apart, or whatever, I might put it on 50 ticks away if there's a good Fibonacci and support confluence, or I might put it 80 ticks away or 100 ticks away. All depends on the chart. This move was looking really strong. Technically, it was just indicating, you're going with the trend. It's making new highs, and these pullbacks are golden. And you get this all the time in the euro. When I say all the time, it seems to me an average of 2 or 3 days a week. You're getting a good run that you can participate in on a 30-minute time frame. And now this was just actually today, and this trade is worth looking at to show you that although I was kind of being, conservative, taking 20 ticks, 24 ticks or 30 ticks, whatever, on the earlier trades, let's look at this one a little more closely that it ended up filling me while I was asleep, and I didn't even know about it till, much later in the morning. So let's look at that entry. We got in at 9:50. That's 3:50 my time because this is 9:50 GMT with this nice little convenient accounting. At 35.84, got out at 36.68. So we are we're getting a decent return on that one, where that amounts to 418.50. Even that's on a half contract. So very minimal risk on this trade in terms of where I got filled. But you have to realize, basically, this was an order that I determined this was rock solid support, and it had everything going for it because it was just above the half. I like to put with the Forex, you have to give them a couple of ticks for your fill. So I figure the half is a good entry point, and the handle, of course. Now, in looking at this one, I didn't feel it would necessarily get all the way down here. They went a lot higher now. So I'm looking at this as around a 78% Fibonacci retracement, where there was a breakout here, and it turned out where there was all this rotation. Remember, these are 30-minute bars, so when you see 1, 2, 3, 4, 5, 6, 7 of them right there, that's 3.5 hours of strong rotation where the market held with a nice hammer. So that's really rock solid support. In fact, that's right where it stopped. So this is basically the market profile principle demonstrating itself just by the observation of the candles, observation of the price structure, the market structure, and combining it with the confluence of the moving averages being very strong up, and by generally getting in close to the handle, unless I see because I'm looking for confluence, I'll get in lower if I feel there's a realistic chance. And in this case there was, because I looked at this as a double top, so I figured they would go deeper. So 78% was logical, but and also the as I was probably last time I looked at the chart, maybe 10 or 11 at night before or something like that, the stochastic was also looking like a very good setup if it were to break down. So just simply, eyeballing these things and using the money management of the half contract with if I was wrong and it broke under this, I had an order about 80 ticks lower down around here. I think it was probably around the 35.20 area, and this is a new order now that I'm just leaving in as we speak. I've got 2 orders in, one a little above the 35.20 and the other one 34.05. So that's a bigger kind of a scale I'm using there. all depending. Yeah, I figure we're getting also a little bit longer in the tooth with so many, I think something like 6 days up new highs in a row. So, you know, the next pullback, I'm going to give it more room. So that's how we can just trade more of a sort of like a short-term swing trading strategy. And it's interesting because I just heard the statistic today quoted that the vast majority of the money that's made of all traders is made by in futures and spot Forex is made by swing traders who are holding for 1 to 3 or 5 days, and the vastly highest proportion of traders are the scalpers among beginners. So in other words, all the beginners are scalping because they want to trade a small account and, you know, get in and out and maybe really highly leverage their money and make money real fast, you know, and make a 500% return on their account even though they've only been trading 6 months. And, you know, that's why the statistics have all them blowing out. 95% of them blow out their account in the first year. So the thing is with the spot Forex, you've got to make up that spread, and you have a great advantage of being able to scale with whatever size contract. If you want, you can even do $100 per tick, and then a smaller account is very realistic. $100 for 100 ticks, I mean. You know, but then you could be getting 100 ticks on a trade, and you only make $100. That's why I figure that's a little extreme. But 500 is reasonable because you can get 50, 80 ticks many days in the euro. And you know, if you do happen to get a second contract filled and then it breaks, you know, you're running with $1,000 on your position, and the trade's moving in your favor. So in other words, if you get the second part of the scale filled, and you know you're getting close to the low, if you're buying, for example, like it would have been in this situation, well, you're looking at you know, if you end up finishing up 800 ticks, you made $800. So all of this could be done with a much smaller account than if you know you were trading the futures. You know, a $10,000 account holding overnight with the euro, I think is not realistic. You have to just day trade if you want to trade the euro futures. But here's a way to trade with the group that is the higher, much higher percentage of success rate, swing trading, and using 30-minute chart, which is going to make you more patient and probably more accurate on your location of entry for lower risk and higher probability, and you can really spot these setups very easily, and you have a lot of time to see them. I might look at a trade like this for 20 minutes and say, do I really want to go to bed and take a risk there, you know? And you know, but I just evaluate everything. I'm not in the fray of the battle, and that's why I ended up getting filled 6 ticks off the low on an order that was sitting there for, you know, 8 hours or whatever, so, or 6 hours. So, and then, you know, maybe a lot of times I'm gonna, you know, if it's in the evening and it's not following through and I'm up 20, 30 ticks, maybe I'll only make 20, 30 ticks, but maybe one every 5 or 6 trades, I'll get 80 ticks or 85 ticks or 100 or even 200 is going to happen a lot of times because you might end up timing it without expecting to and have it do one of these euro runners, which are not very rare. They come all the time, you know. Maybe every other day you'll get a big pop of 100, 150, 200 ticks. And, you know, if you trade it, I trade it conservatively, but so far so good. With, you know, all the trades I've had so far have been on the plus side. And if you look at them, you know, they come, you know, pretty close to one a day. I've been trading 5 days. The first one was real small, but, you know, coming about one a day. And getting a good, this is obviously not a large enough sample size, but if you averaged them all out, maybe 30 ticks a trade or something, and no losses. And I think you can have this very high accuracy, combining the tools, as we've looked at the last couple videos and now these 2 videos. So have fun with it, explore that possibility, and hope that helps. Good luck in your trading.